This is an Uncover Japan company research report on CSS Holdings, ticker 2304. CSS is a Japanese back-of-house outsourcer for hotels and hospitality venues, handling dishwashing, kitchen hygiene, catering, and building systems. The investment question is whether a durable but unglamorous niche can keep converting Japan's tourism and labor shortage tailwinds into margin growth, while a low valuation and rising dividend support the shares. At the report reference date in June 2026, CSS traded at 7.7 times forward earnings and 1.35 times book value, while offering a 3.83% dividend yield. Fiscal 2025 return on equity was 20.4%. That combination looks inexpensive, yet the discount is not accidental. CSS is a roughly 4.8 billion yen microcap. Its founding family owns about 47%. Daily turnover is only a few million yen, and the consolidated operating margin is just 3.7%. This is the basic service workflow. In a major hotel or banquet venue, CSS can take over the dish room, kitchen hygiene and cleaning, run breakfast or staff food operations, and provide security, audio, and visual systems for the building. Its Steward segment is the central business, high-throughput washing and kitchen management, where a hygiene failure or missed service window can damage a hotel's brand. The broader one-stop offering makes the relationship more useful than a single cleaning contract. The segment split explains both the quality and the risk. In fiscal 2025, Steward generated 9.37 billion yen of revenue at a 5.9% operating margin. Space Produce, which sells security cameras, in-store audio, and AV systems, generated 5.54 billion yen at a 5.7% margin. Food Service grew fastest, but its margin was only 2% because food cost inflation outpaced price pass-through. The group is diversified, but its earnings cushion remains narrow. The recovery is real, but it should be read in context. Revenue climbed from 9.4 billion yen in fiscal 2021 during the COVID shock to a record 19.5 billion yen in fiscal 2025. Operating profit moved from a 717 million yen loss to a 717 million yen profit. The operating margin improved from negative 7.6% to 3.7% through volume recovery, lower fixed cost absorption, price pass-through, and stronger Space Produce profit. Still, the company has only recently rebuilt its cushion. The balance sheet is a major source of resilience. At fiscal 2025 year-end, CSS had 1.14 billion yen of cash and only 300 million yen of short-term borrowings, alongside a 48.9% equity ratio. Land and investment securities add further asset backing. The report treats the company as effectively debt-free. As retained earnings accumulate, the equity ratio is projected to rise toward the mid-50s, while return on equity eases from the unusually high recovery year level. The key question becomes whether surplus capital is returned, invested, or used for acquisitions. CSS does not need large factories to grow. Its principal assets are people, training systems, contracts, and trust. Physical capital expenditure has historically been modest. The report estimates fiscal 2025 free cash flow at about 650 million yen, and a base case of roughly 600 to 700 million yen through fiscal 2028. That cash conversion supports dividends, buybacks, and a potential acquisition war chest. It also means the real operating risk is labor supply and price pass-through, rather than a large debt-funded asset base. The durable advantage sits in Steward. CSS works for 5 of Japan's 10 and 8 of its 15 highest banquet revenue hotels, including the Imperial Hotel, Hotel Okura Tokyo, and Hotel New Otani. A hotel does not switch a critical dishwashing and hygiene provider lightly. The handover, training, and accident risk are real. Over roughly 40 years, CSS has built operational know-how that is difficult to replicate in a small, unattractive niche. The constraint is that the moat protects contracts more easily than it guarantees strong margins. Management's Go Beyond Next 20 plan targets 27 billion yen of revenue and 950 million yen of operating profit by fiscal 2027. The report's driver-based organic base case reaches around 21.4 billion yen of revenue, while still reaching about 900 million yen of operating profit. That leaves a roughly 5.6 billion yen revenue gap. Management intends to use cross-selling, new verticals, and acquisitions, and the balance sheet has capacity. But until an acquisition pipeline is visible, The M&A contribution should be viewed as optionality rather than an established forecast. The multiple history illustrates the market's caution. Forward PE rose to 18.8 times in fiscal 2023 as the company cleared its going concern qualification and earnings recovered. Yet, as earnings continue to improve, the multiple fell to 9.8 times in fiscal 2024, 8.6 times in fiscal 2025, and 7.7 times at the report date. Against labor-intensive service peers, CSS is near the median on headline earnings multiples. The valuation case instead rests on a high return on equity, net cash, and a competitive yield. The counterweight is a 3.7% margin and extreme illiquidity. These are the report author's scenario illustrations, not price targets or recommendations. From a June 2026 reference price of 912 yen, the fiscal 2028 bear case is 652 yen. The base case is 1,271 yen, and the bull case is 1,945 yen. The base assumes steady organic growth, mild margin improvement, and a 9 times earnings multiple. The major variables are price pass-through, food service margins, inbound tourism, M&A execution, and market liquidity. The right use of these ranges is to identify what needs monitoring, not to treat them as certainty. CSS Holdings is an unusually clear Japanese small-cap case. Its niche contracts, training-based moat, high return on equity, net cash balance sheet, and rising dividend are genuine strengths. Its vulnerabilities are just as concrete. A 3.7% operating margin, food service input cost pressure, tourism sensitivity, a midterm revenue goal that needs acquisitions, and a tiny free float. For investors, the next checkpoints are segment margins, contract pricing, the M&A pipeline, and liquidity. Please explore the full free deep dive at Uncover Japan. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.